Hello, good morning, and welcome to Forex4SteadyProfit.com. I use the Commitment of Traders report, which comes out every week on a Friday, and I need to give me an idea of market direction. I analyze the ratios of longs to shorts for the commercials and non-commercials, and I also look at the divergence on the pairs, and it gives me an idea of market direction. We'll just go and have a quick look at the charts. So here we have the Commitment of Traders information in its raw form. You get the non-commercial positions and the commercial positions, long and short, and then you get the change in open interest. And you also get that broken down underneath for longs and shorts for both the commercials and the non-commercials. And we can see this broken down into a graph over a period of time, which also gives us comparatives, which are also very useful to look back on the history. And so we'll go and do that right now. And here we have a graph of the positions over 52 weeks, that's a year, for the commitment of traders of the commercials and non-commercials. And this is for the Australian dollar. This chart is produced by COTbase.com. And you can see here where we got to a low position with the commercials, and we're completely opposite to the speculators, and they've got a long position, so we're short. You can see we had a big drop off in the price of the Australian dollar. Conversely, when we were at a high and very bullish for the commercials, and we were fairly bearish for the non-commercials, that we actually had a hike in the rise of the price of the Australian dollar. This is a very useful tool to be using, and we can show you other ways that we use it and other things that we do with it. So here we have the Australian dollar, US dollar, and we've got the RSI. Now if we put a trend line on the RSI and we wait for it to go above the 69.1 and come back down and cut through it, this gives us a sell signal. Now, this obviously would have been a very good sell signal here. We had a sell signal here indicating this big long fall that we've had. And quite recently, we've had a rise in the price of the Australian dollar, which is just going through the 50 here. And I'm expecting it to turn back down and cut through the trend line, which will give us another sell signal because we have an extreme position of short the commercials and long the non-commercials on the Commitment of Traders report, and this should be quite a long sustained downward trend, which is always very profitable. Last bit of information, this is Ludwig's divergence calculator, and it works really well, and this helps us with the crosses. These are the currencies against the US dollar, and here we have the crosses calculated, and it gives us a divergence value between the commercials and the non-commercials, and it shows some of the pairs that are of more interest than others. A very useful tool, only available on the Members Centre, and the pairs that are of most interest we do feature on the video on the Members Centre every day, so you get a daily video on those. Hello, good morning and welcome. This is Saturday, the 17th of December, and we'll start as ever. Commitment of Traders report. We'll start with the Australian dollar. This is a 3-year chart, and you can see how we went to an extreme bearish position, and we moved off the highs. We've come down, we've moved quite nicely, and I am expecting actually a pullback. Now we've had a little bit of a pullback, but I was expecting more. So if we just go over and have a little look at the chart, we've had this nice move up. We had a little bit of weakness on the dollar the other day, which gave us this pullback, but I am expecting this to actually go up a little bit further. I've got one trade in profit here, which I'm going to put a stop on when the market's open tonight. I am expecting it to go up a little bit higher, so we'll see how that goes. It's not a trade I'm over crazy about. We've had this fall all the way down, which has taken, I think it's 80 trading days, and it's been moving at about 6.5 pips a day on average. So that's not exactly a big mover, and it's quite an expensive trade on swaps. So we'll see where that goes anyway. Back now. Right, British pound. Okay, anytime. There we go, British pound. Now, if we put this on a 3-year chart again, you can see that the commercials have got a fairly bearish stance. So in 3 years, this is sort of pretty bearish. We started falling down. Well, we fell down quite a way. We've popped back up on the belief that there's some sort of agreement with the leaving of Europe, the Brexit. There's going to be more trouble on that. And also we had a bit of weakness in the dollar. So that's all helped. So we've had a little bit of a rise back up, but I believe this is now going to fade, and we're going to get down to somewhere about the 129 level soon. So we'll just have a quick look at the charts. As you can see, we started falling back down. We have actually got below the 50 on the RSI. You know, as long as that holds, basically, I think you're going to see this fall nicely. We've got a commercial short ratio, which I think is slightly reduced this week, of 1.23 to 1. So we'll see where that goes. But, you know, I see this coming down over the next 6 weeks or so. So see what happens. Canadian dollar. We've got a slight. It's come off the highs. We had an extreme bearish position by the commercials, and we've come off the highs. We've come down, and we've been in this sideways movement for the last few weeks, not really going too far. I expect a breakdown in the oil price, which is oil is at an all-time extreme short for the commercials at the moment. So as soon as the oil breaks down, and we've got problems, it is a commodities currency, which they're going to experience problems over the next 2 or 3 months. I'll expect to see this fall quite hard. So that's what we're looking to for that. Quick look at the chart. USD CAD short ratio 2.18 to 1, which I believe is reduced a little bit from last week. So we've seen this go into this sideways action. We're at the top of the channel at the moment, and I'm expecting a breakout north on this. We are above the 50 on the RSI and pointing quite strongly up. So we'll see where that leads anyway. Euro. I think this week we've had extra bearish position taken by the commercials, as you can see here. I am expecting a big move down on this. If you go onto a 5-year chart, I mean, this is more or less, well, over 5 years, this is the most extreme bearish position that the commercials have taken. So I expect to see a large fall in the euro dollar. We've had a couple of nice candles last couple of trading days. So that was Friday and Thursday. This was Wednesday. So this is where the position was taken. And since Tuesday, we've had a bit of an up and a down, and we're slightly below last Tuesday's position. And I do see this falling off quite nicely. I've got some nice trades on this, but I do prefer the crosses. So I've got some on the crosses as well. We are well below the 50 on the, well, when I say well below, it's 45. It's pointing down nicely. As long as we remain below the 50, this should be bearish for us. Okay, come back. Yeah. Okay, so we'll have a look at that later. Japanese yen. Japanese yen, they are still bullish. We've had a little bit of a pullback. The commercials have got a more bullish, probably increased that since this was taken. Japanese yen, actually, that would have been 1, 2, 3. There's Tuesday's candle at the top there. So that's where they got a little bit more bullish the yen, bearish this pair. The commercials have reduced their long ratio to 3.92 to 1. We're just below the 50. It's 49.48. But I am looking for this to move further down. I prefer it on the crosses. You know, I'm just bullish the US dollar and even more bullish the Japanese yen, but I think it's a better trade on the crosses. So, hey ho. Swiss franc, we still maintain an extremely bullish position. As I showed you before, the 5-year chart. This is a bullish extreme, and you know, I'm expecting quite a big move on the Swiss franc. Once again, prefer it on the crosses. The commercial ratio has reduced from 7 to 3.42, but it's still a fairly healthy position long. We've also seen an increase in open interest, so that's quite interesting. Much prefer it on the crosses, as I've said before, but if the Swiss franc is bullish on the pound, on the dollar, sorry, then you know, it should be as an extreme against other currencies. We are actually on this pair, we are slightly above the 50 at the moment, so we'll see where that goes to, but I am quite bullish the Swiss franc. Mexican peso. Again, we're at a fairly bearish extreme for the Mexican peso. We've seen it sell off quite nicely from the highs, had a bit of a pullback, and it's back bearish again. I'm expecting it to make a lower low. So we'll see how that goes over the next couple of months, but I've still got a trade on that against the dollar. So hey ho. New Zealand dollar. Again, looking at this, we do have it's as bullish as they have been for a long time of the New Zealand dollar. Now, we have seen quite a lot of strength in the New Zealand dollar and or weakness in the in the US dollar, and I think there's probably a bit more to come. We've had a pullback here, which was weakness on the dollar. But I think we might see this go up a little bit more. I've just put a slight angle on my trend line here because I think this needs a little bit more time. I think we're going to go up and down a little bit more. We have actually reduced our long ratio. So I'm looking for it to go up. If it doesn't, it doesn't. But we'll see where that goes. I'm out of it at the moment. And the same with silver. So let's just crude oil. I have got quite a nice trade on this actually, short obviously. This is an all-time short position. If I'll put it on the 5-year chart, this is a all-time short position. This is very bearish for the commercials on the oil price. I'm going to hang on to this trade. It's I think it's got a lot of legs in it. I can see quite a big move down to about the 35 or the 40 level. So we also see a move down for the price of the Canadian dollar. So we'll see where that goes, and move with that. Silver again, the commercials have moved to a bullish position on silver. Now we've seen a bit of a pullback last week, so it did start to go up, and they've gone even more bullish. So I've taken my trades out of that, and I am expecting for the price to rise, and I want to connect. I want to get it on the way back down. So S&P 500. As you can see from this extreme bullish position from the commercials here, they bought this dip, then they went bearish, and then when it came down, they bought the dip again. And this is about the position where all sense of reason actually left the S&P 500, and the actual real value of the shares is somewhere around the 2100 price, and this increase in price here basically is just a bubble. So it has got quite a long way to fall when it actually reaches good sense. So you know, I am expecting, as ever, as a lot of people have said, for this market to crash. If you look at it on the chart, this is the S&P 500. This is a monthly chart, but let's just pop it on a weekly chart. And I put my trend line up, and this has gone now above recent highs on the RSI. Let's move my picture out of the way. Above recent highs on the RSI, and as well, if you put it on the monthly chart, even if you go back, these you can't quite see it up the end of the screen, but that is, there we go. These are recent monthly highs. It's gone above that, and I am expecting it to give a bit of a turn back down. So that's what I'm waiting for on that. I prefer it on the weekly chart to look at. It is quite an extreme position on the RSI. We're hugging the outer Bollinger Band. I am expecting a turn back down. Well, we'll see what happens anyway. Okay, well, thank you all for watching, and hopefully see you next week. Cheers, bye now.